morning all. Ira Epstein of Linn & Associates with your metals market wrap-up for this Thursday, August 27th. I almost said 26th. August 27th, 2020 at 6:35 p.m. Central Time. Interesting day. The day didn't center around anything today but two events. Number one, the Fed, and that's the Jackson Hole Symposium, as we heard a number of the Fed speakers, different members of different Feds across the country offer opinions. Of course, Fed Chair was the main feature, and they are making a change, a structural change as to what they do, much more focus on unemployment, trying to get that going, and instead of a target for inflation, it's more of a range, and they want to let it overshoot. Now here's the problem. They want to let it overshoot, but they haven't been able to hit the target in 10 years. So how do you get it to overshoot when you got interest rates near zero already? What the Fed did not say is they've got the markets back or any of that. They might be saving that for the September meeting. And initially the markets looked at all this. Stock indices broke, then they rallied back. Gold had gone up into the 1980 level. It took off to the downside afterwards. Silver market had one of these crazy ranges again of over $1. Then the number two event, as I saw it, was Abbott Laboratories coming out, and they're here in the Illinois area, and they are going to, in fact, they've developed a test that has been approved now, 97% accuracy, $5 cost to discover if you have COVID-19 virus. It takes 15 minutes. Now, can you imagine what this does for the airlines? They got a pop today. Can you imagine what it does for travel? A pop in that. Can you imagine what it does for movies? I can imagine that if this is effective, that the way things are going until there is a virus cure for it, that we'll go to a movie theater, you'll have to pay a premium, you'll get this test of some type, you'll wait 15 minutes, if you're fine, in you can go. Fly an airplane, they want to make everybody feel comfortable. Take the test. You got it there. You show up an hour early, whatever it is, take your test. If you have the COVID, you're not getting on that airplane. It's a heck of a lot better than doing it with a thermometer. So it is a big positive. It is a breakthrough. Don't downplay it. It starts at $5. Eventually, you know what happens with these goods. If it starts at $5, it goes to $2.50, then to $1, and who knows where from all that. Big news, and that's how I viewed it. When we take a look at the gold market, now this is as of the close on Wednesday, and the reason that they've got this up there is for whatever reason they're still stuck on the August contract. I called the vendor about it. They think it'll be fixed tonight. And this is where the market finished. Now the market's up about $1 tonight, and it's going to move the contract over, but it gives you an idea of where everything is. When we get to the DEES, we're fine. And on the DEES, you're still caught, as I've pointed out over and over, in this big swoop that we had at the beginning of the month, and you haven't come out of it one way or the other. To make matters worse, you got up high enough today to break a downtrend. You had been in a downtrend with lower highs, lower lows. If you took out this number, I believe it was 1970.30, yep, that was it. That breaks the trend, but as I said yesterday, you can't turn the trend up because you would end up with a lower low and a higher high, and that's just what happened today, and you can see what the market's done. So the chop continues. The market's not giving you any idea yet of what it wants to do next. Keep in mind where this market rallied to. It's an important number. Ready? Look at the 18-day average of closes. How often do you hear me preach? That is the key moving average on many charts, because when you're under it, markets like to rally to it. When you break, it's not unusual. You break, you stopped right in it, you came down, then you challenged it again. It's from there that the trend sets up after you've had patterns. So I consider this was a down pattern. Now the market's ended that. It's looking to set up a new pattern, and it did not surprise me when it got there today to say, uh-oh, if it can't keep going, you've got a problem, and that's just what it did. It ran into a problem there. When we look at Bollinger Bands, you haven't hit a lower Bollinger Band. I can go way back when, months. I don't know that you'll hit it now. You've hit the upper bands. You had no problem doing that. And in terms of momentum here, well, the market is not pointing up. It's still just drifting, and price is drifting. I still don't see any setup there that's ready for a trade. In the gold-silver ratio, still no change at all. Silver, to me, is still stronger than gold. And when you look at silver, it did the similar thing. The silver market, this is how we looked coming in today. We had a pattern of lower highs, lower lows. Then we had this rally. Let me take that back. This is how we looked. Remember, today's Thursday. We rallied yesterday, didn't quite get to the point. If we look there, 2779.5 had taken out this right here. I think it was 2777. Let me just show you. Yep. So you ended the downtrend with that. Now the question is, could you get anything going? You cannot set up an uptrend on this pattern because you've already got a lower low, higher high. So what the market did is it reached up, then it came back down, and tonight, where are you fighting? If you can't see that 18-day average is the battleground, I don't know what to do to help your eyesight, but that's exactly where you're at. And while that's going on, the Bollinger Bands are going sideways and momentum is going sideways. In the copper market, it is time for us to be moving to the Ds. I've said that, and I'm going to get that done. Lower highs, lower lows. Now, today's 299 high, if we come back to the high right here, that number was 345. So you haven't taken that out. So you still have the pattern of lower highs, lower lows, over the 18-day average, so you've got the bias up, the swing line trend down, and now you're in overbought territory with both numbers over 70. Again, a difficult combination right there. In the platinum market, we have a pattern of higher lows, higher highs. You tell me the number that we rallied up to run into the resistance. You know I'm going to tell you the line in the sand. Tell me what you went to. You hit 960? 960.10 is that number. I think that's good enough. And the market finishes at 928, and tonight you're just playing there. The difference on this chart, and this is more interesting, is any close over 958.90 or wherever the 18-day average is over the next few days, as long as you don't break through this low, you turn the trend up, bias up, and you'll probably turn momentum up if that happens. So get that on your checklist of ones to watch. And you're still just drifting sideways in the palladium market. It's almost every single day you hit that 18-day average and you've narrowed the market in. So the question is, what next in the metals? And they're not spilling their hand. When you look at the dollar index had an interesting day. This is how we looked Wednesday. All right, so the market had a pattern of higher lows, higher highs, right? Higher lows, and not closing over the 18-day average. If it breaks down, supports at the lower band, and the key is if you're going to break it, 92.56.5 will break any pattern that you've got there for a trend. You went down to 92.38.5, stopped against the Bollinger Band, rallied back to the 18-day average. You don't have anything at work here. You have a lower low, higher high, and 5 days in a row hitting that 18-day average of closes as you're in the search for the trend. So if you find yourself questioning what should you do, you're not alone in a lot of this. A lot of traders wonder to themselves, gee, I'm looking at this, how can I best describe what I'm seeing? Should I be bullish or bearish? Couple of things. Typically in front of major reports like a Jackson Hole, the first day of it, what do I tell traders? It's a major report. Why are you going through it? We're probably going to get something out of Fed Chair Powell. We don't know what it is. I think a lot of traders were hoping he'd say he's going to cut interest rates again. He didn't, but they could be saving that. You don't know what's going on. So in the mornings at 5:40, I review all this. 5:40 a.m. This is published in your hands typically by 6:30, giving you what I think, what's happened in Asia, Europe, points of entry, exit, and instead of generalities like I'm doing here, very specific trade recommendations, assuming I have them, on every one of these sectors. So it really starts your day off. And to make life easy, there's a scroll bar on the bottom on our website. So let's assume you want to go right off the bat to the energies. You're looking at Hurricane Laura, you got your thoughts. Just pull on the scroll bar till it lights up energies, let go, and it plays there. It saves you a lot of time. Each of these videos are about 20 minutes long or slightly longer. So it's not as though I'm racing through these to give you, oh, do this and here's your 3-minute video. I'm educating, throwing out trade recommendations, and I'm doing it for the price of a cup of Starbucks coffee. $7.95 for the first 30 days. No contract, you're into nothing. If you'd like it, stay with it, then it goes to $15, or you can take a 1-year subscription, pay it up front, non-refundable for $13 a month. It's not a bad deal, right? How do you get to it? Go to our website. It's all explained under the word research on our website. Everything's right there, and you sign up there as well. I'm Ira Epstein. You have a great day, and I will talk to you all at the evening updates for the financial markets, and then again in the morning. Take care now.